What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market we did have a relatively flat day across all of the indices. With that being said, we're still seeing a lot of great trading opportunities across the board as well. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so like I said in the intro, there is a lot of great trade ideas right now with a lot of stocks breaking out and going on absolute monster runs. Fastly was one of those stocks. I made a trade idea in the Discord server on Thursday of last week, and just today we did cash out and take profits for about a 19% gain in just a few short days. Now there is a lot of trades like this and a lot of breakouts going on in the stock market, and now is a great time to be a Discord member of the Stocks channel if you were considered joining. You can find out how to join the Discord server by clicking on the link below. Alright, so jumping over to SPY, we were very flat for the day, only going up 0.02%. We did hit that resistance level right at 423 intraday in the morning, and that did cause a sell-off that brought us all the way back down to our previous breakout level at $420. Now remember, when a previous resistance does hold up as support, that is a bullish development in the price action, and it does tell us that the stock market is still getting bullish price action. So 420 support did hold up, and we did close back above that positive sloping 5 EMA, and we still have all of these moving averages stacked to the bull side, with that 20 simple moving average starting to curl up and get into a positive slope. So to the upside, we still have our resistance level at 423 because we did not close above that level. And if we do close above 423, we're looking for our next price targets above at 425 and right around $430. Remember, don't look ahead to 430 until we start breaking above 423 and 425. You don't want to get caught looking too far ahead because each of these levels are very critical, and each of these levels could also trigger a stock market correction at any time. So from these levels, eventually we will get to one of these price targets and it will trigger a pullback. And as long as we're still in this bull market, in this bull trend, and we see support holding up, that will be a great buying opportunity. So if you're getting a little bit of FOMO and you feel like the market is running away without you, it's just simply not the case, and there's always a great buying opportunity right around the corner. Like I showed earlier, there's a ton of great trade ideas, and that just shows that the market is still bullish, and there's still plenty of stocks that are going to go on their runs very soon, and they just haven't done so yet. So don't get FOMO, just remain disciplined and patient and look for the next best trade. On SPY, we still have important support at 420 and the 20 simple moving average right at 417. Remember, a close below 420 is a warning sign, and a close below 417 is a caution sign that the market could be rolling over. But right now, we're not getting that price action, and the price action is doing the opposite, and it's continuing to knock on resistance levels and breaking through them. So this market is bullish, but do know it is on low volume. Remember, the market loves to take the stairs up and the elevator down, and we still do have to get through CPI data and the FOMC meeting in the middle of June. So going into the middle of June, understand there is risk, but also understand when I say that there is risk, that doesn't necessarily mean that the market has to go lower. Remember, you don't get reward without taking on risk, and when the market is at its most risky levels is usually when you can actually make the most rewards. You just need to have a disciplined approach to the stock market and understand when to cut your losses if the market does turn against you. So don't just hear me saying there's risk in the middle of June as saying that the market is bearish. We're staying objective, we're blocking out the noise, and the price action and the trend in SPY is still bullish. On the NASDAQ 100 triple Qs, we also had a flat day only going up 0.05%. And intraday, we did find support at the 5 EMA right around 335. We did hit that very critical resistance level, which was the next price target at 339, and the price did get rejected from that level, and we closed yet again back below 336.9. So remember, you don't want to look too far ahead, and right now 339 is a very strong resistance level. However, if we do break above 339, we are looking for our next price target to be somewhere around 342.8. That will be a very strong resistance, and it will be a brand new all-time high. So don't expect to see it blasting right through that level without some sort of pullback coming very soon. So remember, as long as the triple Qs are in a bull trend with bullish price action, we will be looking to buy off of support in the next pullback. The strong support levels on the triple Qs are 334.6, 332.5, and that 20 simple moving average just above 329. Remember, price action below the 20 simple moving average is a bearish indication that the market could be rolling over, and a price action close below about 334.6 would be an early warning sign. The same risks that are in SPY are the same risk we have in triple Qs going into the middle of June, so just be aware of the risk and don't necessarily let them scare you out of trading in this market because there's still plenty of great trades. On the Dow Jones, the price action went down 0.07% and closed right on top of the 5 EMA. The Dow Jones is still in a bull trend and the price action is still looking bullish as well. We do have a pretty strong resistance level at 348 that we need to break above to get to the next price target at 350. But overall, the Dow Jones is still looking bullish with the critical support level at 343.6. If the Dow does start closing below the 20 simple, look for possible support at the 50 EMA down here around 339. On the Russell 2000, we had yet again another bullish day, closing up over 1%, and we did see the Russell getting up to that price target at $233, but finding resistance there and failing to close above it. If the Russell can break above 233, the next price target is all the way up here at 237. That will be a brand new all-time high, so don't expect to see it happening very easily because this is a strong resistance level at 233. So again, don't look ahead, and remember all of these levels could trigger a pullback. So from here, if we see the Russell failing to break above 233, we could be coming back down to retest this breakout around 227 to 228. We could also still find support at 230, but don't expect that to be a very strong support level if we do start to see selling. The most critical support is all the way down here at the 50 EMA at 223, and it does look like that 20 simple moving average is going to try to cross back above the 50 EMA very soon, which will mean the Russell 2000 is going back into a full bull trend, which is going to help push the price action to brand new all-time highs. On the ARKK ETF, we went up 0.39%, and ARKK did break and close above that resistance level at 112.68. However, we still did fail to break and close above the 50 EMA, which I did tell you was going to be the strong resistance level above 112.6. That level is right around 114.5, and we need to see ARKK closing back above the 50 EMA for a few days in a row to start getting bullish on ARKK. Remember that ARKK is coming out of a bear market and we need to see the price action and the trend confirming the breakout before we get bullish on ARKK. The good news is though, we did get 2 price action closes above the resistance trendline breakout, so ARKK is slowly but surely starting to look more bullish. However, that doesn't go without risk because we could still come back down and retest support at the breakout level right around 109 before we continue to go higher. So watch for resistance levels on ARKK at 114.5. and our support trend line, which should now be resistance right around 119. Downside support is going to be right around this 109 level, and if that does break down, we're looking to possibly retest this 20 simple at 107 and our support level at 106. On the VIX, we went up 3.83% today, and we do see the VIX staying very low near the support level around 16.6. Remember, the VIX below 18.2 and anywhere between 16 and 19 is completely normal volatility, and there's nothing wrong with the VIX at these levels, and it's actually a bullish indication. Remember, the VIX is a great indication of fear, and a low VIX means we're more than likely going to continue to see all-time highs. So the VIX is validating the bull market, but you need to watch it closely because if it does start breaking back above 18.2 and getting back into the 20s, that could mean that we did see a market top and we're due for a pullback. Remember, the amount of the pullback depends on how much volatility we see and how bad the data coming out this week and the outcome of the FOMC meeting are. So be patient and watch the VIX, but right now the VIX is not flashing any warning signs that we need to be concerned about. On gold, we had a little bit of a cool off today, but we still have the full bull trend. We do have support at the 20 simple at 1884 and our support level right around 1876. The price target on gold is still up here at 1923. On silver, we did get a little bit of a bearish day with the price action closing below our support level at 27.6. It is possible now that we could come back down and retest the 50 EMA as support, which is right at $27. Look for another potential attempt to break out of 27.8, and we need to see that breakout to get to our next price target at $29. So as you can tell from the chart, silver is definitely in a sideways consolidation, and as of today's price action, it is starting to lose the bullish trend. On Bitcoin, we're currently down about 0.25%, and we are starting to see people trying to buy the dip very close to this support level at $30,000. Now remember, there's no rush to buy into Bitcoin because we're still in a bear market and all of the moving averages are stacked to the bear side. So there's still a lot of downward momentum on the price, and notice that the price action is below all of the moving averages. So be patient because it's still very likely that we are going to test support at $30,000. Remember, if 30,000 breaks down, you're looking for support at 27,000. All of these support levels are fairly strong support levels, so even if we do get a bounce off of these levels, you still need to wait to see that we break through a resistance level because we are in a bear market. Remember, a bear market means a downward trend, lower highs, and lower lows. So you don't want to get overly bullish in a bear market because the trend is lower and the price action is more likely going to continue to go lower as well. Just like in a bull market when price continues to go higher, in a bear market, price is very likely going to continue to go lower. So be patient and watch those critical support levels, and you really need to see a price action break back above about $37,000, and then we still need to get back above about $39,000 before we even consider getting bullish on Bitcoin. So be patient and watch those critical support levels down here because they are very likely going to be tested soon. We can also see these Bollinger Bands are starting to contract and they will start expanding soon, so we could see a big move coming in the very near future. On Amazon, we finally had a bullish day today, going up over 2%, and we did see Amazon closing above that resistance level right around $32.60. The price action is back above the 50 EMA, but it's only one day of price action and we need to see follow through. We did see the breakout of the 50 EMA on increasing volume, which is always a positive indication to see that there was a lot of buyers on that push. Remember, if Amazon can start breaking above these resistance trend lines, that's going to be very bullish and we could see Amazon going back into a bull market. So watch the resistance line breakout level right around 33.36, and we do have price targets up here into 3400s and 3500s if we do start to break out. The downside support levels are the 50 EMA at 32.46 and our previous support level at 32.09. On Tesla, we're down about 0.25% today, and Tesla did look like it was going to try to break out of this downward resistance trend line, but as you can tell, we did not get a price action close above the breakout. That doesn't mean we can't try to break out again, but it does mean that there was a lot of sellers near this resistance level at 626. So as we've seen already and we've seen again, 626 is still a very strong resistance level. And even if we do break above it, we have resistance just above at the 50 EMA right around 641. So remember that Tesla is still bearish and the trend is still down and the price action can't close back above the 50 EMA. So there's absolutely no reason to be overly bullish on Tesla just yet, because remember, if it does start breaking below support levels below at 594, we could be coming back down to about 546. So be patient on Tesla, and we're just a few short days away from knowing if it's going to try to break out to the upside or if it's coming all the way back down to support in the 540s. On Apple stock, we went up 0.67% today, and Apple stock also did try to break out today, but it did fail to close above that resistance. Remember, Apple has resistance at the 50 EMA at 127 and 128. And at one point in the day, Apple was trading above both of those resistance levels. However, we did not close above them, so it doesn't count. And we still have to get price action back above this 50 EMA at 127. Apple will now have strong support just below at 126. And if 126 support level does break down, that will be a relatively bearish indication because that will mean that Apple is failing to break out and form a higher high on the daily chart. So we really need to see Apple trying to close above about 128 to start getting bullish on Apple yet again. If we break below 126, look for support below at 123. On the financial sector, we dropped about 0.25% today, but at one point in the day, we were trading all the way down here at the 20 simple moving average, and that level did act as support. So the price action did close below the 5 EMA, but we still have the benefit of a full bull trend in the financial sector. On the industrial sector, we went up 0.25% today, and again, we did get a buy the dip scenario off of support, and we did close right near that 5 EMA. The industrial sector is still in a full bull trend, which does mean it could continue to trend higher. On the healthcare sector, we retested that 50 EMA as support today, and it was a positive test because that level did act as support and we did see it bounce off that level. However, don't forget the healthcare sector is losing the bullish trend, so we need to see that price action getting back above the 20 simple moving average to remain bullish on the healthcare sector. If the price action closes below the 50 EMA, it could mean that the healthcare sector is going much lower, so watch out for that support. On the energy sector, we continue to see bullish price action closing well above a positive sloping 5 EMA, and we still have a very strong bull trend. The energy sector does look like it wants to continue to go higher. So jumping back over to the S&P 500, we can still see a lot of bullish price action and trending across the board in the stock market. However, we still see some big stock names like Apple failing to break out above critical resistance, so we need to remain disciplined and we still need to remain cautious. There's plenty of risk in this market, but there's also plenty of rewards and lots of great trades to be made at this current time. So understand the risk going into the rest of this week and the middle of June with the CPI data and the FOMC meeting. Remember, that doesn't mean the market is going bearish just because we have these events, but I do want you to be aware of them because they are risks that we have to get through and they could impact the stock market very heavily. Remember to be patient and wait for price action breaks above resistance to get bullish and below support to start getting more defensive. Right now, the stock market has bullish price action with bullish trends, so we're going to remain bullish in this bull market. Don't try to jump the gun and don't try to be a hero and don't try to call a top in a bull market. It's very possible we can continue to go higher and we could still go higher for a very long time before we see a major correction. So be patient and stay objective and stay disciplined. And remember, on the Stocks Channel Discord, I'm always giving you intraday updates and analysis to help you navigate this market. Now is a great time to be a Discord member because there is a lot of great trade opportunities and I'm bringing lots of brand new trade ideas to you daily. If you're interested in joining the Stocks Channel Discord server, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, And as always, I will see you in the next episode.